Hey guys, welcome back to another video. This video is brought to you by FX Choice. Don't forget to thumbs up, comment and subscribe. In this video, I'm going to be talking to you about win rate and bringing your personality out in the markets and how to define what type of trader that you are. So some of us are naturally impatient and some of us are naturally patient. You know, Warren Buffett quote usually goes along the lines of that the markets is taking the money from the impatient and giving it to the patient individuals. That is pretty much the one rule of thumb. But when it comes to actually FX trading, we want to understand the difference between whether you're an intraday trader, swing trader, scalper, long-term day trader, sentiment investor, and sort of work out where you fit in. Now, the easiest way to do that is to understand whether or not, first of all, you're patient or impatient. Swing trader, scalper, long-term day trader, sentiment investor, and sort of work out where you fit in. Now, the easiest way to do that is to understand whether or not, first of all, you're patient or impatient. So write it down. Which one are you? Are you impatient or are you patient? How comfortable are you sitting and leaving a trade for? Is that 15 minutes, an hour, 4 hours, a day, or a day plus? Write that down. Which one are you? Now what we've got from that is we've understood whether or not you're impatient or patient, and also how comfortable you are to be able to leave your strategy to play out. Now, once you've worked that out, the next step is understanding that the smaller that the time frame that you trade, okay, you're going to have a smaller profit factor. So to understand what a profit factor is, a profit factor is I risk £1 to make £1. That is what we call a one profit factor, yeah? You're risking the same amount of money to make the same amount of money. If I was risking £1 to make £2, okay, then I have a 2 profit factor, which means that my win rate doesn't have to be as high. For example, if I'm operating with a 1 profit factor, which means I'm risking £1 to make £1, I'm going to need to operate at, a 70–75% win ratio in order to make reasonable profit. However, if I have a 2 profit factor, I only need to have a 50% or above win rate to make money. Because if out of 10 trades, if I lose 5 and I'm risking 1% on each trade, I've lost 5%, haven't I? If I win the other 5, okay, and each one is hitting a 2 profit factor, I've made 10%. So 10% minus my 5, I'm up 5%. So the more of the profit factor, the less win ratio. So when we're building out our plan of how to trade, we want to take that into account. So naturally, if you're scalping, you're going to be trading on the 5 minutes, the 15 minutes, the 30 minute sort of time frame. You're going to have to understand that you're looking for smaller movements in the market, which means that you're going to have a lower profit factor. This in turn means you're going to need to have a higher win ratio, okay? If you're trading, for example, the hourly, the 4 hourly, the daily, it is much easier to predict the turn points in the market and have a higher natural profit factor, which means that you have to take less opportunities because there are less movements in the market. However, off of the back of that, you will be able to achieve those higher profit factors. So when we weigh this up, if you have a low profit factor, you are generally going to be trading on the smaller time frames, okay? If you want to have a higher profit factor, you're going to be trading on the longer term time frames, such as the hourly, 4 hourly, daily, and so on and so forth. So you need to weigh it up. Can you keep your hands off of taking trades? And if you want to take lots of trades, you now understand that you are in that 5, 15 minute, 30 minute sort of category. And that's the interesting area where you will be trading and you are now categorizing yourself as a scalper. If you're in that 1 hour and 4 hour time frame where you're happy taking fewer trades, having a higher profit factor, you're now in that sort of mid-time sort of trading. Okay, I wouldn't necessarily call it long term, but it allows you to get that profit factor. It's also a perfect time zone and time layout of your trades for those that are working, because you have to check your charts a lot less than what you would do if you were scalping on a smaller time frame. And again, moving up even further, moving to the daily, you can have an even higher profit factor when you're working out in the markets, because obviously you've got the turn point is a lot more. So you have a lot further that you can gain in profit, giving you a tighter stop loss and a bigger profit factor. So if we was to look at a scale, being on a small time frame of 5 minutes, you're going to be taking more trades with a low profit factor of probably 1, maybe even lower, okay? When we go all the way up to the daily, you're going to be taking a lot less trades, okay? But you're going to have a higher profit factor. So from this video, guys, I want you to understand that the different types of traders that there are, from being a scalper, midterm, hourly sort of trader, going up to daily, what to expect in each category. So guys, what we're going to do is we're going to go over to the charts and we're going to talk about long-term and short-term trends and how that affects the different categories of trader. But from this, what I want you to take away is a lot of people ask me, what should I be expecting to gain from these different timeframes? So if we were to break this down, 5 and 15 minutes, your profit factor most likely will be 1. Anywhere below 1 is dangerous, okay? Because you need to have a higher win rate. Moving to the hourly, I would expect your profit factor to be around 1.5 to 2. And then going to the daily, anything 2 plus. I've seen people achieve as high as 4 or 5 plus, but they're taking a lot fewer trades, okay? So I hope that makes sense. Don't forget, this video is sponsored by FX Choice. Make sure you thumbs up, comment, and subscribe. Okay, so what we're going to do here is we are now on the FX Choice brokerage. We're now going to look at short-term and long-term trends and how we define these depending on which trader we are based on the profile, either talking about the scalper, which is the 5, 15 minutes and the 30 minutes, or whether or not we are sort of the midterm trader where we're trading the hourly, the 4 hourly, or if we're the long-term trader where we're trading on the daily time frame. So let's start with the daily because it's nice and simple, okay? So if I am a long-term trader and I'm trading FX and I'm trading on the daily, I simply use 2 moving averages, which is the 8 and 21 exponential moving average. So we're going to start off with putting the 21 in. And I only want visualization, so I like to keep my charts nice and tidy. So I'm just going to allow this on the daily, the weekly, and the monthly. So now that we've got the 21 moving average on there, we're now going to put the 8 moving average on there, and we're going to put that as red. And again, we're only going to allow that to be visible on the daily, the weekly, and the monthly. Now what this does is it's showing me almost the short-term, long-term trend, if that makes sense. So I can see that the 8 is above the 21, so I know that there's bullish momentum on the daily. Now, when I'm trading on the daily, I may have a look at the weekly to see what's happening. And you can see quite clearly here since June 2020 that pound has been in an uptrend. So what I'm going to do now is I'm going to get a separator line, and I'm simply going to draw a red line there of when the trend moved to the upside. So that means looking at this long term on the daily, I would know from this point onwards that I should be looking for buy trades on my daily time frame. So from the daily onwards here, we can see that we would like to go long. Now, how do I trade the daily time frame? Well, in my previous video, we spoke about support and resistance zones. So there's nothing different here than drawing those straight back in here and connecting those levels. So we can say that this is quite clearly a level here. Now, what I would be looking for is price action to be testing this high here. So when price moved all the way up here, it came down, it sort of tested here with this buyer's bar. We may have looked to actually buy in here, but the trend at this time was just forming to be in this upside motion. Now, if we just create the trend line here, we can see going along this level here that we've got price moving up nice and consistently. Now, there's 2 ways that you can trade on the daily. You can trade based on swings, where you can see the trend is actually down, where you might have looked to go in for a buy on the price around here and gone up and targeted the previous high. Now, what I was talking about with profit factor and going into that area, would have looked to enter after these couple of buyer's bars, probably around here when it's taken out the buyer's bar and come out of the zone, and had our stop loss down around here, which is 200 pips, roughly, which means that our upside up here, as you can see, was 600 to target the previous high, giving us a 3 profit factor. Now, The part that you need to decide when you're doing long-term trading is whether or not you want to trade when the short-term trend is down on the daily. Some may not like that. If you do not like that, what you would then look to do is wait for price to go back above, which it did here, knowing that your weekly and daily moving averages are in line. And there's a very simple way to trade on this, and it's called pin bar trading. It's very simple, very, very simple. So you can see here that when price pulls back to the moving averages and dips below, actually bounces off our trend, we get a pin bar. You simply are putting an entry above when the pin bar high is taken out, and your stop loss probably about 20-30 pips below that low. So we're looking at around 130. We want to get at least a 2-to-1, which is 260, which is there. So that would have been a nice trade. We then wait again for a pull back to the moving averages and an extension down. And we can see that here. We had a nice pin. It is bearish, it is red. It does not matter as long as you have a long tail. So what we could have done here is wait until the bar high was taken out. On this one, the distance is actually a bit wider. So getting a 2-to-1 on that may not have been so appetizing. But we're at 200, so 230. So we need a 460 target. You would have been in that trade a while up to there, but we still would have hit the target. Again, you could wait for a smaller pin bar, such as this one here, or even this one here. And again, any of these here, this green one here or here, and targeting a 2-to-1. And you can carry on doing that. And as we see, prices are extending away from the moving averages out as we speak. So we always wait to get them when they come back. Now, the beauty of this is when you're trading daily, we're not looking to just trade just pound against US dollar. We can trade absolutely everything. Although I do prefer trading the majors, such as pound dollar, euro dollar, US dollar yen, euro yen, pound yen, gold, those sort of things. So I think we've given enough information there on how to long-term trade based on your personality. Now what we're going to do is we're going to use the same example on this chart, but we're now going to go down to trading on the hourly and 4 hourly. So what I'm going to do now is I'm going to insert moving averages. This is going to be the 50 and 200, and we use this on 30 minutes, hourly, 4 hourly, 15 minutes, and 5. So when we put these levels on there, I'm going to put on 50, going to make it nice and thick, and so you won't be able to see this on the daily, but if I drop down to the hourly, you can see it. On the 4 hourly, you can see it. It keeps your charts nice and tidy, which is the most important part. We're then going to have a look at the 200 as well. When I'm trading on the hourly, for example, I'm going to want to make sure that the daily is in line. So you can see that the red is above the green on the 8 and 21 on the daily. So when we go down to the hourly, you can see now how I only want to trade when the 50 and 200 are in the right direction. So on this, I'm looking for more of swing trading pullbacks. So a prime example here, I can see a great example here, would be looking at this sort of zone level around here, indicators, shapes, and we're going to put in the zone. You can see that zone nice and clearly there, where price is rejected, broken through, come down and tested. Now, these two examples here perfectly fall in line with what we want to do, because the 50 is above the 200 here, it also is on the daily, and at the time of consideration for this trade, the 50 would have been above the 200 here too. So all we're looking to do now is to trade these pullbacks where they're rejecting the zones. And again, we're looking for, at least remember, profit factor on 1 hourly and 4 hourly, we're sort of looking at least 1.5, okay? So I usually look to target the previous high, where the last consolidation was. So we're looking at around 120 pip drop. So what I want to do is make sure that's my target, and I always make sure that I have a 60 pip stop loss. The reason why is that's half the distance of the total rally. So I know that if it goes up to the previous high, I actually managed to get a 2 profit factor, but sometimes we fall short. So again, just making sure we hit that 1.5. So with a 60 pip stop loss, I need 90 pips. We can see here that we would have just achieved that 1.5 on this one. If not, if we waited, we would have achieved slightly more, if not our full 120 pip movement that we wanted. And then you can see on the second one here, pullback down there, consolidation again around the pullback. Nice little bit of a slowdown in price after this sell-off, and it's just a rinse and repeat of exactly the previous setup. So you can see there we've got 140 pip movement, so we half that, which is 70. And we're looking to make at least, what, 70 plus 35, so we're looking at 105. And there's our 1.5 profit factor. Or if we wanted to hold out, we could have made more. So you can see how we can achieve our 1.5 profit factor, and then also how we achieve using these time frames and moving averages in line with the price as well. And again, these profit factors will always vary depending on what time frame that we are trading. So let's go down to the final one, which will be on the 5 or 15 minutes. Now, when I'm trading the 5 minutes, I still want to look at what the daily is doing, because I want to be trading with that momentum. So, for example, the daily is in an up, as we recall. It's in an up. It's been in an up for a while. So on the 5 minutes, I only want to be trading on the buy side when that 5 minutes is up, okay? So I'll be doing exactly the same as what I was doing on the hourly, except for what I'm now looking to do is on this, I would probably using Cluster 2.0, which is an indicator that I use. I'll put the link in the description, and it helps identify the different pullbacks on the smaller time frame, so you don't have to sit there and watch it. Here's a prime example. We can see price here has rallied and the price is in an uptrend. I'm just going to draw a nice sort of support zone through here. Now the difference here is that, again, we'll be looking to take the pullback where we've had the slowdown, come into moving averages, and we'll be looking to buy in here, but we're only looking to make probably a 1-to-1. So I'm not going to be so convinced that we're going to make 40 pips, but hey, we could make 20 or 30. So we're going to have a 30 pip target, which is here, and a 30 pip stop loss, which gives it room to breathe, which gives me my 1-to-1 distance. Yeah, and again, I can achieve that by taking any one of these pullbacks, making sure that I am getting out at previous highs and achieving that 1-to-1. So if we're to review everything that we've just gone over, on the 5 minutes, I'm looking for a 1-to-1 profit factor, and I'm looking to, either hit the previous high or just below it, okay? If I'm trading on the hourly, I'm looking for a 1.5 profit factor. If I'm trading on the daily, I'm looking for at least a 2+ profit factor. I hope this has helped you guys understand a little bit more about the trends moving from the 5 minutes, the 15 minutes, the hourly, and the daily. Also help you with your personality of trading and what that looks like for you. Guys, don't forget to thumbs up, comment, and subscribe in this video. And if you're enjoying this content, get in the comments below and give us your feedback.